In recent weeks, U.S.-China trade negotiations have intensified, with both Washington and Beijing agreeing to resume talks amid escalating trade tensions. Although a temporary 90-day truce was established back in May, a lot of Americans are still wondering what all of this means for them. And join us now to help us make sense of the trade tit-for-tat in the back and forth is Jeremy Jansen, head of supply chain at Wells Fargo. Jeremy, thank you as always for taking some time. Tell me about what the current state of the supply chain is right now that's most exposed to China and the United States.
Yeah, I think JD would start with just the supply chain right now continues to be very resilient. As we look at our data and we talk to our clients, the flow of goods for the full year from China to the U.S. specifically, continues to be up year over year. Which I think would surprise most people. There was certainly a pull forward of inventory and invoices financed in the first quarter. We saw that trend continue into April. There was certainly a slowdown in May of the invoices that we financed, but not as drastically as I thought it would be. Right? Keep in mind, our data lags about 25 days because we're financing invoices behind purchase orders. So it takes maybe 20 to 30 days for that purchase order to end up into an invoice that we're financing for the buyer. So our data does lag again about 20 to 30 days. The data for May, which would have been April purchase orders, surprisingly was only down about 15%. And now that we're into June and financing those May orders, if you will, we're seeing a very strong pullback in financing of invoices out of China.
So as you're doing those invoices, kind of given the fact that you talk about the little bit of a lag there of several weeks to a month or so, walk us through the differences you saw pre and post Liberation Day around early April.
Yeah, great question. Again, the first quarter, there was a tremendous pull forward in international invoices financed by us, almost up 50% year over year, right? And when you look at many of the data points out there, there was an extreme pull forward of goods from all over the world into the U.S., right? And that led to a little bit of inventory build that thankfully is still there, right? The inventory that whether it's retail or it's wholesale inventories are still very strong relative to pre-Liberation Day or pre-tariff levels. We're at about 1.38 to 1.4 times inventory to sales, which is still a really healthy level. As it relates to the data that we've seen pre and post Liberation Day, I point to kind of that 7-day period where there was an extreme amount of uncertainty, right? Once we got to April 9th and to April 10th, when there was this 90-day pause for the rest of the world, that decompressed the environment a little bit. So actually, other than changes in our data for April activity in China, not much of a change pre or post Liberation Day.
Yeah, you're also describing the lows in the equity market almost to the day. April 7th was our our recent low here, I should say, for the S&P 500, and then we started to see that rebound into the April 9th, April 10th windows for our V-shaped recovery in equity, so it's fascinating to watch how the two overlap. I'm curious what you're seeing from companies who are currently, currently viewing the supply chain environment right now. Is it cautious? Is it optimistic, or a mix of both?
No, I think it's cautious is still the right word. Certainly there is some optimism as it related to the 90-day pause and how that will ultimately play out, but absolutely still cautious. We're having more and more discussions with large corporates around true and pure supply chain finance programs, shifting from a just-in-time inventory model to perhaps more of a just-in-case inventory model. So if you do stock up, right, they're coming to their financing institutions to see how can they stretch out payment terms to their suppliers. That obviously has an impact on the working capital of the buyer, and they can leverage these supply chain finance programs, again, to slide out their payment terms, but still get their suppliers paid on time. We're having a meaningful amount or a meaningful increase in those discussions with our corporate banking clients.
What are the elements of the supply chain that are prone to seasonality, and specifically, what does that mean for the summer months?
Yeah, as I think about the summer months, it's going to be this question or this uncertainty, JD, that still exists with the tariffs. I would anticipate we'll continue to see inventory coming in to the U.S. Not so much for the summer months, which are here, but more for back to school season. So I wouldn't be surprised if we continue to see, again, in the current and at the current tariff levels, continued increases month over month in some of the imports to prepare for back to school season.
Yeah, there's no doubt, Jeremy, you're very deeply steeped in the world of month-over-month data,
Yeah.
as you've just said. But what does the year-over-year trend tell us from where we were in June of 2024?
Yeah, so from a year-over-year perspective, we are seeing it as incredibly flat year-over-year in terms of the amount of invoices that we are financing. Up slightly, and that's not, I believe that up slightly, again, a couple percentage points, is just our existing clients taking more advantage and using their supply chain finance facilities to again stretch out some of those payment terms and get those suppliers paid.
Jeremy, is there a particular sector that you see right now adjusting their supply chain strategy in a way that other sectors could be learning from or maybe paying a bit more attention to?
I think there's a lot of discussion in the healthcare sector and the pharmaceutical sector about inventory levels, uncertainty around tariffs in the future versus where they are now. So there's been a lot of activity with clients in that sector.
What is one reality about the current supply chain landscape that you would want more consumers to know about?
Yeah, and it's not so much a supply chain landscape as it is inflation and what is going on with the consumer. The consumer is still holding very strong, right? May retail sales, ex autos, right? Autos were down, I think, 3.5% for May year over year. But generally speaking, the consumer is holding in very strong and continues to purchase at levels very similar to this time last year. And the fear of inflation being driven by these tariffs, that is not showing up in the data yet, right? I think the most recent CPI read was up 2.3, 2.4%. So the fear of these costs rising as a result of the tariffs, that is not yet showing up in the core goods that people are buying.
Is it your expectation that it will?
I think it's everybody's expectation that as the year goes on, that will gradually start to push up.
Yeah. Perception drives the reality. We're in an economic world where there's so many data points and potential catalysts. Obviously, we've got a FOMC meeting this week. We watch the state of the labor market, the divergence between the so-called soft data and the hard data. I wonder what potential catalysts you will be most paying attention to for the back half of 2025 as it relates to financing and your role as you watch the supply chain.
Yeah, again, we'll be looking at the global distribution of invoices that we're financing, and does it continue to shift and turn away from China to other Asian countries? What do we see from the U.S. suppliers into U.S. buyers, right? Do we start to see more, shall I say, insourcing, right, from buying product that's manufactured in the U.S.? And of course, paying very close attention to those inflation and those retail figures.
Hey man, we love these conversations. We think it's really important to try and do our best to keep a finger on the pulse of what exactly is happening with the supply chain, especially as the state of trade roils things in many markets across the world, and we're all seeking stability here. Jeremy Jansen is head of supply chain at Wells Fargo. Thanks a lot for taking the time, as always. Good to have you.
Thanks. Have a great day.